Alright, what's good, YouTube? We're back with another video, and today is Thursday. We got a little bit of price action for the video, and just showing you guys just the entry model and how I got to my bias, what I wanted to see coming into the day. So we're gonna jump right into it. That's how we'll start off the day, right? So we'll come in the morning, boom, check if we have news. We had news at 8:30 and then 9 p.m. So you don't have to really look too far into this stuff. Just see what time it is, see the impact, and then get to it. So bam, a lot of stuff on the chart. So we're gonna clear it up and you know go back to where it all started. So pretty much coming into the day, I was looking for a little bit of shorts. We had a daily low right here, and prior to the open, we were very very close. We were below this, at least below the halfway mark of this wick. And then obviously I jumped to the 4 hour. Another reason why I was thinking shorts is drop it out real quick. I drew this 4 hour wick, and then here is the halfway mark of this wick. We closed below, so that also indicated for me at least we could push lower because we closed below. Whether we would have put in a little buy model, a short buy model, and then if you look at this gap right here, right there, boom, boom, we closed below that gap too. So we closed below a bullish gap, and then we ended up closing below this 50% mark of that wick. So that all indicated for me shorts. Now, what else showed me, that we're more likely to go short than, go back up higher. So I'll get rid of all that stuff real quick. And I drew this high to this low. None of this price action is here yet, boom, we respect this 50% mark, which is equilibrium. So now shorts are very, very much, showing me, hey, we want to go to take out this daily low. We want to go, maybe even head somewhere lower. So put all this stuff back on, jump back down, we're going to go to a 15-minute time frame. And obviously that equilibrium was met. So now I jump back down to a time frame that I really like, 15-minute, and I take get all this stuff very quick. Didn't have that there, obviously. This, and then yeah, so we're good. So if you look on this 30-minute, obviously this candle was market open, highlighting down in red. The black is 10 o'clock, so that's the opening range, it's 30 minutes. So I wanted to see this high to this low right here get respected. It was this low at the time. That's why I have this purple line right there. So it was that low at the time. And if you look, like I said at the time, we'll do this. Makes so much more sense. Prior to 9:30, prior to all this stuff, we take this high right here. So this is what I'm seeing. Get equilibrium respected on the 4 hour. Now I'm going to see if EQ will get respected, lower time frame too, which is right here. So going into the morning, 9:15, we're starting to push towards it. And this is the 50% mark, meaning if we want to tap inside of this gap, which was a 1 hour gap, little volume imbalance up there, gotta fill it in. So 1 hour gap, tap equilibrium right there, and respect it. I'm very, very bearish, and I can possibly anticipate this low being taken. So now, entry wise, there's no way I'm just gonna, take the short and be like, oh yeah, we're gonna go lower, and that's it. You know, I'm gonna just enter wherever. You have to be aware of price action. You have to be, you know, cautious of what you need to see happen for that. So we had this high resting right there at equilibrium inside of the 1 hour. Buy stops, people who were already selling short here have a stop loss there. So if I'm bearish, I need to see buy stops, buy stop liquidity get taken out of the market. And what happens at 9:30? We'll jump down to it in a minute. Boom, market open. We rip up, tap EQ, fill the 1 hour perfectly. We fill the 1 hour perfectly. We wick up there and we tap that low volume bounce as well. And we respect. And what else do we tap? We tap this volume bounce right here, bam to bam. We fill it with that wick perfectly. It's honestly beautiful when you understand what's really going on. So once I've seen that, I'm honestly I'm waiting. You know, I'm hugging my finger on the trigger. I'm ready. You know, to shoot when it's time. You know, like I'm not. Oh, I gotta go shoot. I gotta. I'm like, I see a fair value gap, but no, like, it has to be at the time, and it has to be making sense. So after that happened, this real quick. So after that happened, seeing EQ get met, I'm understanding EQ, you know, discount. We're already in discount where I want to short in discount, or at least close proximity to discount. And this it's very close to this discount. We're not gonna give shorts another chance at getting in a higher price when we already did the work. So the 1 hour EQ took out buy stops. So you might ask yourself like, oh, well, why not this high? You know, why not this high, but this high on a 5 minute time frame, right? Well, if you look, when you go in very closely and you look why EQ is resting here, you know, you don't see all this stuff yet. You're anticipating it, but you don't see it yet. So you could at least anticipate this high getting ran while filling in a 1 hour. Like this 1 hour should hold us from going this high. And that's the concept of it, you know, as well as inverse fair value gap failing to get met. So we inverse, start moving lower, respect the 50% mark. There's no more bodies getting up there. We're closing above it. After we closed out, we pull back up to it, fill in the imbalance, but we don't tap it. That's bearish. We don't even want to come back up to this gap. It's bearish. Respecting a 1 hour. That's bearish. Equilibrium of this high to this low. Bearish if we are short. Buy stops getting taken. Bearish. It's all in the, you know, it's all the proof's in the pudding. That's what they say. It's there. So at the time, what am I looking for? I'm looking for a shift in the market. So a market structure shift. Simple as that. It's very simple. If you look after we took this lunch, sell side lunch of yesterday, yeah, right there, that's lunch. That's lunch's low. Boom, taken. Failed to run this low again, so we leave it open. LWD goes right here, left to wide open. What do? We shift in market right here. But the reason we shift in market is to induce that trying to put shorts in the market, but we have to fake every other trader out that's thinking shorts at the time and like, oh shoot, we might go long. Relatively go highs up here, 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 you know, high right here. Oh damn, you know, some people could have capitalized on that, which that's perfectly fine. But the narrative matters, you know, for an extended period of time. You can't just be right forever. It's gonna flip on you soon, you know. So that's why you have to be very, very, you know, cautious and aware. So let me get back to it. Right here. So we got a market structure shift. After we take out buy stops, we trade back down through this swing low. Right there. That swing low gets traded through. Preferably, we want to close. What do we get? candle closed through, boom. What opens up? First presented fair value gap. So the first fair value gap after 9:30. After 9:30. You also it's not what you want to claim it as. You can claim the 9:30 candle as your first presented, and this is what it would be, just like that. First presented gets inversed and then tapped in right there, but sometimes that's tricky. I didn't claim that as my first presented. This is the first presented fair value gap that I saw, open up in favor of my draw and liquidity, and that it wasn't at 9:30, it was after 9:30. So now, if you look at this fair value gap right here, was first a bullish fair value gap, a bearish, I'm sorry, and we ripped through, making that inverse. So if I was long, look, we get a tiny shift in the market right there, just a tiny shift that maybe shorts could have played out. People who want short right there, bam, put their stop loss there, got ran out one more time because equilibrium wasn't met, stops weren't met in this 1 hour. It doesn't have to get filled to the top, but we didn't do the work yet. So all that little short noise right there, done, out of there. And your bias is correct still, but your timing is off. So this inverse, oh shoot, inverse a bearish gap too after shifting. Well, yeah, we're bullish. And if we went long here after this tap inside of this gap right there, done. Why? Because that's not the narrative of this inverse. This inverse was inversed at this time to then what? Flip back down, right? And we reclaimed it. That's why it's called a reclaimed fair value gap. So we reclaimed this fair value gap. And in my opinion, you can grade this as your, you can grade this. Was this first presented or was this first presented? Me personally, I would grade it. Look at this. Why do I think that's first presented? That's why. Drag it out. Look how we're just using it. We're just shuffling through. When now we respect short. Boom, boom, take the high. When we fail to leave bodies above it, short. So that's why I believe this as first presented after 9:30, not at the 9:30 candle. So, and this is what fooled a lot of people. Like if I were to say this was first presented right here. Shuffling through it, boom, we fill, boom, boom. Take this high right here, and then we fail the tab. Right? We actually don't fail, but we just touch it a tiny bit. Okay. What is that indicating? Bearish. But at 9:30, that's just the candle that had expanded, so we're going to leave that candle open. So that's why I said this is what I believe to be first presented fair value gap. So we get, back on page, but I just got to make sure that's emphasized because you got to be able to understand, you got to be able to understand what the meaning is and, what it's actually doing, why are you choosing that one, and what's going to give you more of a conviction that it's going to go lower? Well, if I see this film open up, that's the first one I actually see, and, do the work, actually did the work. So what do? After we reclaim that fair value gap bearish, it's going to use its same narrative again. So this low, what do? Meet equilibrium perfectly. What is that inducing? Shorts. Where do we tap on this reclaim fair value gap? A little over the 50% mark. Where do we tap in this first presented? We blitz through it, but did we go above the body? No. Did the body close above the 50%? No. Did we shift market? Yes. All this indicated bearish, all this indicated bearish. Boom. It's my foot right there on the pullback. So just a little bit. Just a little bit inside. I'm trying to get it right there, 443. So a little bit outside of my thumb. So 443. 444, that's fine. But where did my stop go? Right there. Right at the body's wick. Or this candle's wick, I should say. Where am I targeting? Stay low. As well as, I wanted to see top of this gap get touched right there. Obviously, we didn't. Reversed and, putting a little long. But, how did I go about this trade? Being in it and actually trying to manage my stop loss, and obviously it was really just A plus. It was beautiful. I went into a slight drawdown, but the drawdown was super quick. I wanted to see that get filled, and I wanted to see a sharp move down. And we closed out of both of the gaps. We didn't even leave a body in the gap, meaning we're in a hurry. And straight close down. Bam. What do we do? Open up another gap right there, fill it. Boom. Straight close down. No bodies get left in any of these gaps. And that led me with super, super conviction. So I had this, I had to enter 3 micros, and I put a limit order right there, taking off 2 of the 3 micros. So I capitalized on a $230 stop loss and capitalizing on about 350 right here. And then I'm just leaving a runner. And I left my runner past this daily low, and I traded to the midpoint of this. So obviously your money is gonna, get different once you have a 1 micro compared to 3. It's not multiplying, but I traded right down to this 50% mark. So between this daily low and then this gap, because it was like, all right, well, honestly, if we go here, it's $50 more. Like, I don't really care. I'm gonna capitalize on, a chunk of what I have on. It was one micro. You don't want 1 micro to reverse stop you out, and now you don't capitalize on $300, $400 versus 350, or 400, 450, whatever. So it's just being aware and not trying to get greedy for more money, because it's very easy to do that. But that's pretty much the trade. Everything showed me short. The daily bias, the daily chart was very, very key to my trade today. Daily low. Look where we open at. We open right there, literally at equilibrium. Take out buy stops, shift market, reclaim this gap, tap first presented, and I'm short. It makes too much sense to not do it. And I'm taking that loss. I don't give a fuck. Like, I'm not trying to, talk all crazy. No, I'm taking that loss. If I take that loss on a trade like this, I'm perfectly fine with that. Like, perfectly. I'm not going to be any upset about the trade that I took. I'm not going to be, like, scared that I'm in the trade. I was sitting here and I was just waiting for that displacement because it was just too clean. If I look on this 5-minute chart, relative equal goes bam to bam. If we want to even go long, we have to take these out. We're not leaving lunch low. Lunch raid low gets put in right here. And then what do? Fail to take it. So that's going to show you bullish to do this, to do that. It's all just, a little backwards. So that was London's high, the highest high in the London session. And then this is just, continuation. Not really worried about any of that up there. Just looking for, buy stops resting near a fair value gap and choosing, which one I want to see and what makes sense. Once that analysis is grouped together and you have your analysis pretty firm, then you'll be, pretty good. So I'm going to show the executions really quick. All right, so here are the executions. Entry time 9:37, 9:37. Obviously, three micros, and then there's about 11 11-minute trade, total. 5 minutes to get that, first little partial. So entry 443, exit 278, and 353. So we'll go over that real quick. So 443. So about right there. So 443. First partial was at this low, 353. Took off 2 contracts. And then 278. So I took it to the midpoint right 278. So just above the midpoint, like right there. Maybe even perfect almost, but just above it. Yeah. Literally just right above it. So about a couple ticks off, but yeah. I mean, you can call it luck. You can call it whatever you want, but honestly, that's just up for you to decide. Yeah, so you take a trade from here down to there perfectly, and you know, you just call it, So I mean, that's pretty much gonna wrap up the video. We ended up getting to the bottom of here, but you had to sit through all of lunch, everything, and PM and all that stuff right now. But that's pretty much it. So hope you guys enjoyed the video. That's gonna wrap it up. A little trade recap of Thursday's price action. It was a great day. We'll be back tomorrow. Probably, I don't know if I'm having a video out. I'm not really tripping about making videos. They just come out if I want to record. I wish I would have recorded yesterday's trade that I took, but honestly, it's no point. It's a little late now just to post, late video on Wednesday's price action, but it was a great trade. I just look at it right now. It was right here. Took this short right there. We had a shift in market structure. Pulled back to the 50% mark. I had my stop loss like right there. And then I got out right around there. So it was a great trade yesterday too. It was, we ended up selling off, insanely selling off. But I took my fruit, it's a very nice trade. So yeah, I mean that's don't really got to do too much about wrapping it up. We've been kind of in a little sell off lately. Markets are looking a bit more bearish at the moment, but could expect some sort of rebalance. And just looking at this weekly chart, still want to see a weekly close, and I want to see maybe us get to this low and possibly draw towards this monthly fair value gap. So that's pretty much the bias on the week/month. I'm looking for not straight looking for shorts, but I want to see what the market's doing week by week, day by day, and then trying to go intraday and put a little analysis together and just trade my risk accordingly. I'm not really too worried about making money. Money just comes in this game. It's not about making the money. It's about really just learning your model. So yeah, these are all ICT concepts. I made none of this stuff up. I learned it, strictly from YouTube, and I could say it works. You can call it luck, but I will always say it works. So hope everybody enjoyed the video. I appreciate you guys watching. See you in the next one.